What's up everyone, and welcome to today's new video, where in this one I'm going to be teaching you an easy ICT based strategy to be able to pass funded accounts on Forex pairs. Now, I have given a lot of indices based pairs in the past, and so I thought it was time for a Forex based model. This one will incorporate techniques like the New York Midnight Open, using that for overbought or oversold, and then a Judas swing during London session. This will be London session based, so if you do trade London session, then this model is definitely for you. So like all of our models, the most important thing is our daily bias. And in the examples I'm going to show you, we will establish a bias before jumping into the model itself. So as you can see, we're on EURUSD daily chart. See, we had a leg down in price and then a change in the state of delivery as we closed above the last down close candle. Then we ran up once more and returned into the daily order block, where we are going to be looking for our model to form. As you can see here, we're down to the 5-minute chart, where we are going to be looking for our model to form. Now, I mentioned earlier that we incorporate the New York Midnight Open price into this model, and it is basically the baseline of the model we trade. So I want to note out New York Midnight Open price, which we will extend out in time here. And I want you to use this as an overbought or oversold. We obviously don't use indicators, but this is the closest thing you will get to an indicator. Now, when New York Midnight opens out, and make sure your time down here is on New York time. So for me, that is 4 hours behind UK time. And then we mark out the New York opening price where this candle opens up. Once we have that marked out, we use it as an overbought or oversold. So in essence, for this model, we want to see, if bullish, we want to see a dip below price, below New York Midnight Open price, and then a run higher before heading higher. And if bearish, we want to see price go above the New York Midnight Open and then come lower and gives an entry. So looking into this model here, I'm just going to replay the bit of price action here. So we are going into London session at 2 AM, right? And then we have this level, which is our daily order block. We want to see a return to the daily order block, which we get straight after 2 AM. So this is our London kill zone open, as you can see here. And keeping in mind, we are bullish, and currently, relative to New York Midnight Open price, we are currently oversold. So being oversold and bullish, this is an ideal scenario for us. What we want to see now is a shift in market structure or change in the state of delivery. So as we go into London session, we want to see price move up just like this, and then we lift an order block on 2 AM. So we take this order block, I'll take the body of it, extend it out in time. So now that we have extended the order block out in time, this isn't a rule, but I want to clarify something. If the order block or fair value gap we want to enter off of forms under New York Midnight price when bullish, this is a good sign that it should hold. And then of course vice versa for when we are bearish. Now, I want this order block to hold here, and we wick above New York Midnight Open price. So I would take a buy from this position, and then relative for targets, I wouldn't aim too high, as even though we are bullish, we don't want to be in the trade too long, and also at the same time we are in London session where New York may come and sweep London lows before heading higher. So the majority of the volatility is in New York, however we get a nice volatility profile here in London as well. Now you may notice we have equal highs up here, which I would target, and inefficiencies inside this bit of price action. So that is a nice target for us, and entering off the order block, I wouldn't want to see it go below the body of this one. So I'll put my stop loss here and then target the equal highs. Now remember, the New York Midnight price is the baseline of everything behind this model. In essence, we want to see it oversold or overbought, and then a shift in market structure and any PD rate entry. In this case, we have the order block, and if we let it play out in time, as you can see, we get a nice deep retracement into the order block and in a discount, and then we buy off of the order block below New York Midnight price again, and then aim for the relative equal highs where liquidity is resting. Now I should clarify before diving into this GBPUSD sell example that I only really use this Forex model on EURUSD and GBPUSD, and then of course I use DXY watching on the side for correlated movements. Now you can use this on AUDUSD or USD CAD, any USD major pairs. However, I only really like to use it on these. So now that we have that out the way, I want to dive into this GBPUSD example, and we'll head down to the 5-minute where I like to take the best entries for this model and see what price provides for us. Now that we're on the 5-minute chart, I want to first note out London open and then also New York midnight open. So we head over to the candles open, which is down here, extend that out in time, and then I like to make it bold. So as you can see here, we have our daily order block level, which we would want to see a run to, which acts as our Judas swing. So any movement in the opposing anticipated direction, or I should say opposing direction to our anticipated bias, any movement in the opposite direction of our bias counts as our Judas swing. New York midnight acts as the anchor for this. So once we trade above it and we're bearish, that is our Judas swing. So ideally we want to see in this scenario our Judas swing come up to the daily order block, and we'll see if we can get that now. And then we finally get our tap an hour into London session. So now what we are looking for, keeping in mind we are now overbought, we want to see something like this scenario happen. So we've tapped into the order block. We may want to see an SMT here with dollar, which is what I referred to earlier. When I say I'm watching the dollar chart for correlating price action, I want to see, say dollar made a low here. So let's say dollar did this and then this and ran up, whereas GU ended up doing this and actually took the high. I would count that as an SMT, as dollar didn't and GU actually did. So that is just an indication that we are going lower. However, for these examples, I will just show you the GU chart. So what scenario am I looking for here? We've tapped into the order block, we are overbought. I want to see something like this form before we head down lower to clear out this consolidation or this. So in essence, we will look for that now. And as you can see, we do wick below, but we don't close below, confirming our change in the state of delivery. So I'll continue to wait here. And then we have a tap into this order block. Now, because we wicked below, I like to label that as our shift in market structure. And then we came up into this order block. I'm going to take a sell from this order block with my stop loss a few micro pips above the high of the order block. And now I'm going to target these equal lows down here. As you can see, the relative equal lows at the bottom of the original consolidation are always a good target, and that will give us a nice 1 to 2. So if we let price play out now, you can see that we run down and take out a take profit. Now, to prove this model works on different pairs, I want to show you an AUDUSD example, and I want to show you a different example of us running into an order block. This one, I want to show you an example of a liquidity grab actually working with the model. So on the daily chart, we have a run down and we leave relative equal lows all down here. All of these are relative equal lows, and you can see we want to target them. So that is our draw on liquidity. We actually come up and then purge these buy stops above here. Once we have these buy stops above here, we want to look for our model to form, targeting lows down here, which you can see we haven't reached yet, but we want to target possibly the previous day low, which is always a nice target. So diving down into the 5-minute chart again, as you can see, we run up into the above the buy stops, I should say, and then break lower. Now remember, we mark out our New York midnight open price first for our overbought or oversold. So marking that out, you can see that we run up past the midnight open price, which gives us a Judas swing just before London session, and then London session opens up at 2 AM New York, and we actually do rise above New York midnight open price again. So you can see we have an order block here, which forms actually during New York midnight open price, and it closes above it. So this order block we want to see a run into, and as you can see, the bodies actually do respect the 50% level of the order block, and then we head lower. Once I see this here, of course we rise above, so we are oversold at this point, and then the very next 5-minute candle actually closes below this up close candle, which gives me the indication that we are heading lower. So, and now we are of course gone from overbought to our shift. This isn't by technicality a shift in market structure, but since we closed below the last up close candle, I count this as my shift by technicality. I will get into that into another video, but that is a bit more of advanced theory. So you could wait for a shift and then enter off this fair value gap. However, this would be my entry here. So once we have closed below, I want to see a return into it and I want to see this hold. Notice how price, actually if I make this grey, notice how we close below and then price comes in, but then also comes into this order block, respects it and moves lower. That would be my entry once we tap into this one. And by the way, for this I wouldn't want to see it close above 50% of this, so that if we did close above 50% of this, I would pull my trade and then I'll put my stop loss. You could put it here or above the larger order block. I will go the larger order block and then target a nice 1 to 2. Of course, like I mentioned earlier, you could target the original consolidation, which is where our previous day low lies, and that would be a huge risk to reward. However, for the sake of hindsight, I will only target a 1 to 2. So I hope you enjoyed this last example, and just to recap the model, we mark out New York midnight open price for overbought or oversold, of course with our daily bias in mind, and then we look for a Judas swing higher if bearish and a Judas swing lower if bullish, below or above New York midnight open price. Then we proceed to look for our entry technique or entry model in the form of, it can be a shift in market structure and then order block entry or fair value gap entry. Or if you're a bit more familiar with ICT's concepts, it can be something like this, where we have a change in the state of delivery and then we head lower or higher. So if you did enjoy this video, please do leave a like and subscribe. More content is coming. My links to these socials are down in the description below. And turn on post notifications so you can keep up to date with the content that is coming. And I will catch you in the next one. Thank you for watching.